morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, quick video tonight. This video is being filmed on Wednesday night for Thursday's trading. That is 07/30/09. Traders, as I mentioned in last night's video, we are buyers of dips. Now that we are above that head and shoulders, we will continue to buy dips. I have noticed that now the markets have created some formations that beg for the market to move higher, but technical indicators, you know, the big common ones, stochastic, CCI, you name it, you know, RSI, just the common, most used indicators are all pointing down for tomorrow, but formations are clearly pointing up, and when that happens, Omni always makes the same decision. It goes with formations over indicators. And if you always make that same choice every time you run into a market where indicators seem confused or out of sync with the formation, if you know you have the formation correct, then you choose formations over indicators. And if you do that every time, you will find continuity in your trading approach, in your overall long-term results of that type of trading. It will help you to have a disciplined, methodically planned approach to trading. And you have to have a methodical plan, you have to have discipline, and you have to have certain rules that when I see a certain formation or a certain situation of the market, I always act the same. Well, that's what I do, that's what Omni does, and that's what I'm here to talk to you about this evening. Formations over indicators. Again, technical indicators are pointing lower, but the formations are pointing higher. Let me show you two charts very quickly to illustrate what I'm trying to, what I'm trying to get at here. Let's go look at the charts. Okay, traders, what you're looking at right now is a chart of the September S&P or the ESU9 daily bar chart. Each one of these green lines represents 1 day's trading. This is the head and shoulders that we have challenged and gotten above. This would be considered support if in fact we came back down and tested it. But instead, we have the formation or the makings of a bull flag illustrated right here. Here is your flag building. This illustrates your flag pole or these two trading days right here. So here's your flag pole, right? Here's your flag. And if we are buying dips, which is our posture at this point in time, then we're buying anything that comes down inside this flag. We buy the dips and expect rallies, and a breakout out of the flag is most common when you see a market building a formation like that. So if you have a couple of quick up days, and then you get a couple of days that look like this, usually that basically is a flag pole and the flag forming, and what you're supposed to do is wait to get above that flag and it breaks out. The flag could last 5 or 6 days. It may be short-lived, but that is the formation we're looking at, and we are choosing to go with that flag formation over some bearish-looking technical indicators. So that's the S&P. Let me show you one more chart now. It is the NASDAQ daily bar. Okay, traders, NASDAQ daily bar September. What you are looking at is a nice parallel channel that has only been violated once on the downside. The market came right back and got above it. It seems to hit bottom, top, bottom, top, bottom. Now it's making a run for the top, and this is easily a target that we should be able to get to. This is a very positive looking chart structure all the way up this parallel channel. And once again, you have a bit of a pennant forming here. Because look, if you just do this, there is a pennant right there, and those usually break out towards the upside. So as with the S&P, there is a flag type formation building. This would be your flag pole. It is clear, and it usually will break out towards the upside. So once again, between the NASDAQ and the S&P's formations, we are going to choose to trade formations over technical indicators for Thursday's trading session. Pull your charts, do your own homework, see how a lot of indicators are pointing towards possibly overbought, but they can turn very quickly and stay in the overbought zone for a long time, and that does happen. So that's what I think will happen with indicators as this market breaks out towards the upside. Of course, if we happen to be wrong, our stops will be in, we will get knocked out of the market, and we will not stay in for some massive drop down. We will simply have stops and get knocked out, but that's a formation that usually calls for more upside, and that's what we're going with tomorrow. I hope this helps. Pull your own charts. Let's see what you come up with. So, traders, you see those charts? You see the formations that do look bullish? Again, I always go with formations over indicators when it appears that indicators are behind the times. Once again, to reiterate, a stop is your best friend. So if it turns out that the formations do not hold and indicators were correct, our stop will be in. We will take a calculated loss risk as we have. Every time we trade, we always have a calculation of where we would take our losses. That stop will be in, and we'll survive to trade another day. Always use stops. With that in mind, traders, this is the formation that I'm going after in the S&P tomorrow. That is a flag formation, and it looks like one. You have a flag pull. You have a few days where it moves down, and then the odds are good that you will break out towards the upside of that formation. That's the one on the S&P daily chart. That's the one I'll be trading tomorrow. Come on down to the site, traders. It's www.livewithoscar.com. Grab a free membership. Jump into the free chat rooms. Come join our classes. We hold interactive live classes during the week. Come on down and join them, and I'll see you at the site. Traders, that's it. I got to get out of here. Give me a buzz anytime, day or night. 702-629-4755. And I am out of here. Traders, remember, say this to yourselves every morning, every afternoon, every evening, because it'll help keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.